I bought shares of Pepsi in June 2018. Since then, for the past 3 years, I have a 14% annual return on it, including dividends. At that time, I was also looking into the stock of Coca-Cola, and I still believe I made a good decision when I invested in Pepsi. If we look at the price charts of both companies, they are both growing for a long time. And they both have a long dividend payment history. So how do we decide which one is a good investment? Should we buy both? First of all, the problem is you cannot predict anything by looking at the price chart. People ask me all the time, this stock is going up, should I buy it? Or this stock dropped 10% from its top, should I buy it? You cannot predict anything from the price chart. The price chart is completely irrelevant. Forget it. This is for amateurs. People who make investment decisions based on the price chart are the ones who lose money. When we buy a stock, we get ownership in a business, and fundamentals of the business can tell us whether it's a good investment or not. Let's say you have a friend who wants you to invest in his coffee shop. What would be the most important question to ask? You would probably ask, how much money we can make with this. At least this is what you should ask him, right? I mean, this is common sense. Maybe the coffee shop is new, so nobody knows yet if it will work or not. And this is why it's a high risk investment. But let's say he opened the coffee shop 5 years ago. So the question is, how much money he made in the past 5 years, and is it growing? This is the most important question, because why else would you invest in a business? You want to make money, right? I mean, you can make bets on the price chart, but that's not investing, that's gambling. And like with all gambling, most people lose money and the casino wins. So when your friend approaches you to invest in his business, would you ask this question? What are the price quotes other investors gave you in the past 5 years? Can you draw these quotes on a chart? This would be a really stupid question to ask, right? Now, take a look at this chart. This shows the revenue of Pepsi for the past 37 years. And as you can see, it's growing. In 2020, they made a record high revenue in the pandemic, but let's come back to that later. Now, take a look at the revenue of Coca-Cola for the past 37 years. You can see that it's going down for a long time now. They had the most revenue in 2012, and since then, for the past 9 years, it's going down. I mean, there are many other factors we need to check when we are looking at stocks, like the dividend yield, the valuation, and many other things. But this last chart alone already tells me that I don't want to invest in Coca-Cola. And keep in mind that the price of the stock may not even reflect this. You can look at the price chart of Coca-Cola, and it went up 43% for the past 9 years. Even though the revenue is going down. So this is a huge lesson. The price doesn't always reflect the real value of the business. Maybe people are buying the stock of Coca-Cola because it's the most popular brand on the planet. Maybe they are buying it because Warren Buffett owns the stock. I don't know. And even though the stock price went up for the past years, I'm still convinced that I made a good decision not buying it, because over the long term, the stock price will definitely reflect the real value of the business. Today, the stock market is crazy. They are buying everything and anything, but for the long term, I don't bet on this. Craziness can't last forever. And another thing is the dividends. I like to invest in companies that can and want to pay dividends. It's obvious that Coca-Cola is a company that wants to pay dividends. They are paying dividends for decades now. But the question is, can they pay it? They need to pay dividends from profit, but we can see that the revenue is going down for a long time. So if this continues, they will have to cut the dividends. And when a company cuts their dividend, the stock price will fall like crazy. On the other hand, I can see that Pepsi wants to pay dividends, and they also can pay dividends because they generate more money over time. So we know that one of them has a declining revenue and the other has a growing revenue. But we also need to know why is this happening. We need to be familiar with the business a little bit. How come one of them is growing and the other is not? At first sight, their most known products are almost completely the same. And in fact, many people would say that they prefer Coke. So what's the difference? The difference is that Pepsi doesn't rely only on beverages. About half of their revenue is coming from snacks. Products like Lay's, Doritos, Cheetos, Fritos. They also own Quaker Oats and Pearl Milling Company syrup, formerly known as Aunt Jemima, that people eat for breakfast. And Pepsi even benefited from the pandemic. While restaurants were closed and people weren't consuming that much Coke, they piled up with snacks for staying at home. And Pepsi reported record revenue for 2020. Of course, Coca-Cola is a great company and they might even develop their business strategy in a way that they can grow their revenue again. And I might even buy the stock if it would be much cheaper, somewhere around $35. But right now, the declining revenue tells me that I can find better companies to invest in. So all in all, forget the price chart. It doesn't tell you anything about the business. And as I always say, there is no one metric that can help us make a good investment decision. But we need to check many things before we put our money into a business. For example, watch this video where I explain what is a good dividend yield that I usually look for before I buy a dividend paying company. If you like the video, please hit the like button. Thanks.